Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, September 2nd, 2021, and I'm pre-recording this Trading Places Live for a little bit later this morning. Futures currently up roughly about 0.1% to 0.2%. NASDAQ a little bit stronger, Dow Jones a little bit weaker. We're going to get into a lot of what we might expect from later today, and also what we saw yesterday in just a minute. First, I do want to go over that agenda with you. We're going to start off with the daily market recap, talking technically, scanning strategies, earnings spotlight, and the 3 you must see. Before we get into that, though, I do want to take you over to earningsbeats.com, our website, where I am Chief Market Strategist. I would love to have you give our service a shot. We do have a 30-day no cost trial, so it is a free trial. You can try everything we have at Earnings Beats. Love to have you take a shot there. Also, if you scroll down at our website, we do have a free Earnings Beats Digest newsletter. This does not require any credit card. You can unsubscribe at any time. It's simply educational, and I think provides some pretty good trading candidates if that's what you desire. But it is published 3 times a week, Mondays, Wednesdays, and Fridays, typically out about an hour or so before the market opens. All you have to do, type in your name, email address, hit that subscribe button. We'll make sure we get you set up again. Completely free, no credit card required. Love to have you as part of our community. All right, let's move on and get started with the daily market recap. So on Wednesday, we had a little bit of mixed action. You can see the Dow Jones Industrial Average finished down 48 points. The S&P 500 was up 1.4. NASDAQ up 50. Still on a percentage basis, only up about 1/3 of 1%. Mid caps up 7 points, or roughly 1/4 of 1%. Small caps up 4.5, and that also is about 1/3 of 1%. So mostly up on Wednesday, but off of the earlier highs. NASDAQ in particular came down quite a bit from the earlier high. And the Dow, which did finish down, still finished above the 20-day. So I'm seeing pretty bullish configurations here across all of our major indices now, with price action mostly trending higher. The current price above the 20-day, as you can see on all of our major indices, and the 20 above the 50. And if you notice, small caps even just made that golden cross where the 20 came up above the 50. So right now we have really good bullish configuration on all of our major indices. From a sector perspective on Wednesday, you can see real estate leading again. This has been about 4 or 5 really solid days now in the real estate group, breaking the new highs. You can see that volume coming in. So this is a group definitely being accumulated again. That AD line moving to new highs is strong. Utilities bounced off the 20-day. So after a really strong July and most of August, we had pulled back, hit that 20-day moving average, bounced right off of it. Now looking to break out again. Consumer staples, haven't really talked much about consumer staples, but we have been uptrending in the group. I think on a relative basis, this has not been a great area of the market, but on an absolute basis, it is trending higher again. Also bouncing off a recent 20-day test, trying to break back out above that 73 level. Communication services also in a nice uptrend over the 85, 86 area, actually closed at 86.05 on Wednesday. So really nice action here, all-time high, AD line strong, really nothing not to like there with communication services. To the downside, we started to see energy roll back over again. Not a good look here on this chart. This is one of the few that on an absolute basis does not look particularly good. And look at the AD line. Even though price action not quite back down to the low, you can see the AD line near a multi-month low. So energy, if there's one area of the market that I would be a little careful with right now, it would be energy. I'm also not a huge materials fan. But if you've been listening to the show, you know that I do believe the dollar goes higher later this year, and I think that is going to be a problem for both of those areas. Moving on to the 10-year Treasury yield. First of all, it is Thursday, so later this morning we are going to see initial jobless claims out. Last week, 353,000. This week, we're expecting 350,000. Then we'll get Q2 productivity. This is the second estimate. First estimate was 2.3. We're looking for it to move up just slightly to 2.4%. And then finally, July factory orders will be out later this morning. June rose 1.5%. July, we're expecting a more modest increase of 0.3%. Looking at what's going on, though, in the bond market, this is as of the close on Wednesday, so no current action available at the time of this recording. But 10-year Treasury yield, to me, just simply going sideways. We were trending higher, went sideways, trending lower, going sideways again. And you can see this movement up above and below the moving averages. That's typically a sign of a trendless price action, or in this case, yield action. But we've got a double top in around 1.38%. We've got this double bottom over here about 1.13, 1.14%. And that's the range we're in right now, closing at 1.30 yesterday. And I would continue to look for more range bound action in terms of the yield. Until we break out, that's not going to be great news for financials or the industrials. You can see financials, which had gone up pretty nicely on a relative basis during this latest spike in the yield, has since just kind of meandered sideways. It's very similar to the pattern in the 10-year Treasury yield. Industrials, on the other hand, still really have not gotten much of a bid. Saw a little bit of a pop back when the yields were rising, but since then we've moved to new relative lows. I will say industrials do like the month of September, so we'll see whether or not we can get things going at some point this month. But I think the last 9 years, industrials have outperformed the S&P 500 during the month of September, the entire month, not every day in the month, not the beginning of the month, but I'm talking about the entirety of September. So we'll see where we stand by September 30th. All right, let's keep moving on. I want to get into talking technically. I'm going to start off here with the S&P 500. I just pulled up a 60-minute chart. Not really many issues on the daily or weekly charts, in my opinion, but on the hourly chart, you can see we tried to make a breakout yesterday. The PPO was much lower. We failed into the close. I don't know that we're going to go lower. If we do, I wouldn't expect a whole lot. I would be looking at this breakout level at 4,500. An easy little pullback to 4,500. We're only talking about 0.5% from where we closed on Wednesday. But I wouldn't be surprised at some point to get maybe a 4,500 test. Beyond that, I just don't see it right now in what I'm looking at in the overall market. So I'll continue to look for the various signals that I like to follow, but I'm just not seeing enough warning signs to to view this September like last September. Last September, we had a couple of really big issues with sentiment as we started September. And I think that was one of the reasons why the market pulled back and really struggled for a couple of months. I think we had to kind of get that sentiment issue right. This year, we don't have that issue. So I'm not thinking this is going to be your typical September where we see a lot of struggling. I think this is going to be a September which is similar to what we've been seeing in the market, which is just a market that wants to go higher. And especially as we get closer to the end of September, I think the market's going to anticipate another strong quarter of earnings. So as we go into the beginning of October, that's typically a very bullish period as we anticipate strong earnings. So I don't know. I'm looking at this. I'm a little cautious in the near term, but when I say cautious, I'm not thinking a huge sell-off. I'm thinking, like I said, maybe 0.5%. 1% maybe, but probably not that much before we go up and set new highs again. All right. One other thing I want to point out here during talking technically is the growth stocks versus value. Now, this is the Dow Jones US small cap growth divided by the Dow Jones US small cap value. This is just a ratio, growth versus value. So when you're seeing this going down, it's telling us that growth is underperforming, value is outperforming. When it's going up, it's telling us that growth is outperforming and value is underperforming. Now, when you look at this chart, this is a 1-year chart. And I always like to tell our Earnings Beats members, you want to make sure that you're getting the big picture, because the 1-year chart, while it's a good chart, doesn't always tell you everything. And when you look at this, at least when I look at this, I'm seeing a downtrend, seeing a bounce, but I'm not going to be overly excited without at least taking out this low, because it seemed to be a pretty important low, relative low. We bounced off of it. And then when we broke down, you can see that initial reaction went right back up there, couldn't get through, and then went down further. So it's like this area right in here is the area we need to negotiate. So looking at this chart, if I didn't have any other chart to look at, I'd say, well, maybe this is just an area where we've already had some congestion. Maybe we get up a little higher, but I'd be looking maybe for this to roll over. Well, hold that thought for a second, because if we go to a 5-year weekly chart, same chart, this is growth stock, small cap growth versus small cap value, but a 5-year weekly, I want you to look at this. Here we've got growth versus value, and this is going back 2016, 2017. Look at the steady increase in growth stocks. And then when the pandemic hit, growth took off, left value in the dust. And when we got the vaccine news, look at when we topped, beginning of November. That's when we had the positive vaccine news. And from there, all the way through May, we had a collapse in growth versus value. Value did very well. But now this bounce that we were just looking at on the daily chart, which didn't look all that impressive, on the weekly chart, it kind of looks like maybe we're picking up where we had left off. This trend line's intact. All of this outperformance we saw kind of got, I don't know if you want to call it a bubble, it may be a short-term little bubble, but that kind of worked its way through the system. You can see coming back down, hitting this trend line. And now it just seems like we're heading up again. So it's the same chart, growth versus value, but it's two different time periods. And they can tell you different things about the market, in my opinion. And I think looking at one without the other isn't a real good idea. And if I had to pick one, I want the longer term. I want the bigger picture. I want to see more of what's transpired in order to try to give you a better idea of what I see going forward. And what I see going forward is just a continuation of what we've seen in the past. Low interest rates, high octane growth in earnings generally is going to favor growth stocks. And that's what we've seen. That's what we're starting to see again. And that's what I expect to see going forward. All right, let's move on, talk a little bit about scanning strategy. So I ran a scan, and I don't have the scan syntax up here, but I can tell you I ran a scan that had RSI 40 to 45. So you can set it up so RSI is greater than 40. And then another criteria would be RSI is less than 50, or in this case, 45. Sometimes I'll run 40 to 50. But 40 to 45. I did scooter greater than 75. And then I ran it against our strong earnings chart list, which has over 500 companies on it. These are companies that in their most recent quarter beat Wall Street estimates as to revenues, beat Wall Street estimates as to earnings, bottom line, earnings per share. We're liquid. So I pull up the chart, make sure that the volume is at least a couple 100,000 a day, and look decent technically, either in an uptrend, or if they're not in an uptrend, maybe had a great reaction to earnings, so at least got off to a good start recently, or perhaps just part of a really good group. So a group like semiconductors, which has done very well, I'm going to be a little bit more tolerant of a report maybe that was maybe not reacted to quite as favorably if I was looking at that versus, say, energy or materials, areas in that. If I see a company that beat top and bottom line in the energy space, but hasn't been performing very well, it's probably not going to be on this list. Semiconductor, though, I might give a little bit more leeway to. So there's definitely judgment involved in that chart list. But I think it's put together from a secular bull market perspective. What's leading the secular bull market? And certainly many of the technology, consumer discretionary, communication services, financials, and even to some extent, some of the industrials. That's what's been leading this market throughout the secular bull market the last 8 or 9 years. So those I'm going to favor a little bit stronger than some of the other areas. Anyhow, After going through and running that scan, it came back and produced 5, 9, 12 stocks. So I thought I would try to run through those pretty quickly here. Starting off with BioNTech, BNTX. Huge move up, great volume back in July into the first week or week and a half of August. And now the stock is consolidating. We saw big volume selling off the top. I think we created a fairly significant top there, and probably in an ABC type correction. Maybe we go down to the 50-day moving average. Maybe we hold this support area, the selling that we saw in mid-August. Maybe that level holds just below 325. In any event, though, as we move lower in BNTX, I believe the reward to risk in this trade is getting much, much stronger. So this is a stock that I would be interested in. Also, look at the PPO, which was extremely extended, up over 15. And you can see over the course of last year, that's the highest that it's been. So it was very extended. Now we've pulled back, and you can see the PPO is actually back down to 2.6, getting closer to the center line. And you can see what happened last time we hit the center line. Stock took off. So I think as we wind down here, the PPO pulls back, price action gets closer to, say, the 50-day or recent lows. That's setting us up for a better reward to risk trade. EXPR. So this is Express. And this is a stock that, again, has pulled back. That's the beauty of pulling up a scan using RSI between 40 and 45 or 40 and 50, is that you're almost guaranteed to get stocks that have made big pullbacks or at least are consolidating. So EXPR, after making this push, you can see we've had a lot of overhead resistance up around this 7, 7.5, even up into the 8s. Pulled back off there, but now we're back down to the 50-day moving average, probably pretty close to this trend line coming off these lows. So EXPR certainly setting up as a better reward to risk trade. EVRI, after a huge move up, sideways consolidation here. So I like the sideways action. A breakout above 24 would be bullish. Pull back anywhere in that 20.5 to 21 range would be a great entry point. Look at the AD line, by the way, hanging up near its 52-week high, even though prices have pulled back. So that's another indication that perhaps this weakness that we've seen the past 2 months, it's being accumulated. So sideways consolidation, expecting a breakout down the road. STLD, this one I'm a little nervous about, only because I'm nervous about materials, and the steel group overall has a nasty divergence on its weekly chart. So I think this one, you'd have to be careful. I would just say make sure you keep your stops in play. Clearly, we had some pretty good resistance at about 65 to 66, 67 maybe. We broke out good volume in August, pulled back to that 65 level twice. If we lose 65, and especially that 50-day moving average, combination of those two, I think there's a better chance we could pull all the way back to that low in July. So I'm not going to rule out STLD, especially if you're more bullish on steel. That's fine. That's what makes a market, right? And everybody doesn't have to agree. If you're bullish and you like the chart, I would just say make sure you keep your stop in play and fairly tight. Close below that 50-day moving average, and I'd be more nervous. DOMO. This is Domo Inc. Been up looking pretty nice. Just recently got a 50-day test, broke to a new high. Now it's pulling back. I'd like to see this level right here hold at 85. Now, this was a stock that was at 98 4 days ago. Now it's 85.98. They did beat top and bottom line. Stock pulled back, but I think this level holds right around 85. So watch for that. Maybe watch for either a false breakdown, a reversing candle of some sort. Those types of things would be the type of signal maybe that I would want to take a long position, see if I can get this back to about 98 or so. Now, those were the 5 that had scooters in the 90s, StockCharts technical rank in the 90s, which is a relative strength indicator. Now we're going to go into scooters that are in the 80s. Not that one. TMST, so another steel stock. So I'm going to say very similar to what I just said about Steel Dynamics. The only thing I would say different here is that this one is not even holding the breakout level. So it's not performing nearly as well. It is trying to hold on to this gap support, which is just around 13 or a little below. But if that fails, I think we're going down below 12. And if that were to fail, I think we got a downtrend in play for sure. So again, just be careful. Maybe make sure you keep your stops in play. VSTO, this is Vista Outdoor. I just see a sideways consolidation after an uptrend. I mean, just the big picture, trending up, sideways consolidating. We got a breakout here at about the 38 area. Look at the lows down around the 38 level. Yesterday's low, 38, or excuse me, 39.02, almost down in the 38s. But I see 38 as support. 46, 47 is resistance. So as you get into the 30s, your reward to risk is looking much more solid. EXTR, this is Extreme Networks. Another company that I'm just seeing straight up move, sideways consolidation, key supports all the way down 9.5. Look at that false breakout. You know, I try to tell folks when I see that, you got a definite resistance level at 12. When you're up at 1230 or 1240 intraday, you're in breakout mode. You should be finishing strong. You should have technical buyers buying that breakout. And when it fails, it tells me that market makers, you know, you and me, I'm not going to be selling a stock that's breaking out. So the only way that this stock reverses like this, in my opinion, is if market makers are on the sell side. Maybe they're trying to unload shares for an institutional client. Who knows? I don't know what's going on. I don't know the rationale. All I know is that is a candlestick signal for a short-term sell. And there we've pulled back. But that doesn't mean it's a long-term top and we're going into a bear market on Extreme Networks. It just means short-term. It's a short-term market inefficiency when you get that false breakout. Got to be careful of those, especially when you've been sideways consolidating for a while. Those make me nervous. Next up, PFE. This is Pfizer. Pfizer was on fire. Now it can't catch a bid. Did print a hammer yesterday. Maybe that was the bottom, although I'm not really seeing anything else. Well, I mean, maybe if you want to call this latest breakout on big volume down here, maybe that's a key area of support. But if that's true, we should see this move right back up above the 20-day. We should see this return, maybe a cup, something like that form. I do like Pfizer. If I were to get in right now, I'd probably get in half a position. I'd probably leave the door open maybe to moving a couple dollars lower, getting closer to that 50-day. All right, now in the 70s, there were 3 more with scooters in the 70s that also met the criteria of the scan that I ran. First one, VLRS. This one I'm a little more nervous about because if you notice the volume picked up, we lost the 20, we lost the 50, and the 20 went below the 50. The PPO's in negative territory. I don't know, this one is starting to look more like a downtrending stock. Now, break back up above about 20.5 to 21 would make me start to feel like, okay, well, maybe this was a key support over here. We're just sideways consolidating and we're going to make a run back up. But I need to see that because I don't like the combination of everything I just mentioned. I'd be a little careful here. Skechers. Now, footwear was on fire. Skechers had broken out. It has pulled back quite a bit. I like Crocs and Nike better than Skechers, but I do like Skechers. I'd like to see it get back through the 20-day. I think in the meantime, while we're trading below the 20-day, we might be able to get this stock back down into the 46 area potentially, which is that low after the big gap up back in April. That to me would be the best reward to risk entry. So the only problem I have with it here is that I do think that we've got downside to 46. And so we could be down 8% before we ever hit that major support level. Don't know for sure it goes down there. I just think right now we're more in the middle of a range, and I'd like to get closer to the bottom of the range. And the last one I have for you is Decker's DECK. This is, I think, a really strong looking company. It moved up. I think we had a little bit of divergence issue, you know, moving up. PPO never really broke out to a new high, but I think we're rectifying that by all this sideways consolidation. PPO getting close to the center line, getting close to the 50-day. I think a little bit of more of a pullback to that 50-day would be a pretty good entry opportunity into Deckers. So that's it for the scanning strategies. Let's move on to earnings spotlight. Had a few pretty good sized companies out last night with earnings. So we had Viva Systems, VEEV, pretty good beat, 94 cents versus 86 cents. Bottom line, stock down 8%. Now, I checked yesterday evening for some of these. So actually, maybe what we'll do is take a look and just see what these stocks are doing pre-market. Viva beat last night. They are down almost 7%. So a little bit of a recovery since last night, but still not good. Chewy reported they were expected to lose 2 cents. They lost 4 cents. So went the wrong way there. Stock down 10% pre-market. That's down 78 down in here. Just looks like it's rolling back over again. I'd be careful here with Chewy. OKTA, this software stock. I think it's Okta. Down 1.12%. So not bad. It was actually a big beat. They were expected to lose 35 cents. They only lost 11 cents. So this one not looking too bad. I'd be careful. Maybe watch around that 255 level. You might see a nice little bounce off 255. ASAN, this is a software stock's been performing much better. Very, very strong. Look at it pre-market up 11%. Asana beat. They were expected to lose 26 cents. They lost 23 cents. How about FIVE? FIVE, that's 5 below. Stock down 8.5%. It made a huge run recently. Pulled back quite a bit. And now with earnings, I would have expected maybe a better reaction. Stock did beat $1.15 versus $1.11 on the bottom line. I see a lot of support here at about 205, but we're going to be well below that, opening down at 198. I'd like to see a hollow candle today. And I wouldn't be surprised to see one, to be honest. Don't be shocked. I mean, we went straight up over here. We're going straight back down to kind of wrap this up. Don't be surprised to see a hollow candle on this one. One more reported last night, NTNX. This is Nutanix up 7.44%. Really nice action. 39.70. Open above about 40 would be into breakout territory. So this one, maybe watch heading into the open. We could get a breakout on the stock. They reported a 26-cent loss. Market was expecting a 43-cent loss. A couple of companies reported this morning. I wanted to check Sienna. I hadn't looked to see what Sienna was doing. Stock up 5.5% this morning, 59.95 up near 60. Still in this sideways consolidation pattern, but not bad. And that's about it. Actually, one other one that was reporting this morning was Signet. I wanted to see up 6.5%, getting that breakout. So Signet looks like pretty strong. I didn't see the earnings on the companies reporting this morning. All right, 3 you must see, and then we're going to wrap this thing up. I'm going to go through these pretty quick. EQIX, just wanted to point out, sideways consolidation. Yesterday broke out. Volume was starting to pick up a little bit, but I do like that breakout. AD line looks like it's ready to break out as well. I like the stock. Then next up, we had Open Door Technologies. Look at that AD line taking off. New high, even though the stock's nowhere near low. So I see a lot of accumulation. Big gap up, went back, filled the gap, and now we just broke back out above that. I think this action looks pretty strong. I would expect further gains here on open. And then the last one, Anaplan. This is a software company. Gapped up with earnings yesterday, but look at that big black candle. I just would be careful. When I see that on big volume, I expect further selling, maybe back down to that 20-day and gap support. All right, that's it for me. I want to wish everybody a great Thursday. Don't do a show on Friday, so I'll see you all next week. Next Monday will be my next show. That's Trading Places Live over at earningsbeats.com. If you go over to Earnings Beats, right at the top, after about 8:45 in the morning, click on that link. And when you do, you'll come to a page. It'll actually show you a link to sign up. Right now, it's got a recording, but it'll have a link where you can come into the room. But that show will begin at 9 o'clock on Monday morning. So have a great Thursday, rest of your week, and enjoy your weekend. We'll be back with Trading Places Live like next Monday. Take care, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.